the bounce in the dollar over the past couple of weeks, it seems very consistent with the weakness that's occurred in the equity markets. So the DXY has bounced fairly consistently with the move down in equities over the past couple of weeks. I guess the biggest risk in G10 is probably the euro. We failed a few times to get through 117.50 on the downside. Positioning is very long. Consensus is very bullish. The price action is looking very toppy, quite similar to what we saw in the first quarter of 2018 when the euro peaked around 125. So the euro can move higher probably over the next year, but there probably needs to be a positioning induced correction lower before that could happen. And we could easily see something like 115 or below before the euro can make a valid attempt for a big move beyond 120.
It seems that investors are really flocking to the greenback as a safe haven currency. What exactly does that mean for the Japanese yen?
Yeah, the yen, the yen's interesting. It has got stronger during this period of equity market weakness. I think when you look at, the overall trajectory of where it should go, long-term fair value is closer to 100. That's been our view for quite some time. And also the Bank of Japan's not easing as fast as the Fed. So on a relative basis, from a monetary policy perspective, the yen could get a little bit stronger. And with the new Japanese prime minister, even though they would likely maintain the current easy policy from Abenomics, it does raise some concerns in the market, possibly that Japan policy might not be as easy or as coordinated as it was before. So, we're seeing the natural drift of dollar yen towards its fair value closer to 100.
And Jason, just finally, we do want to get your call on your core outlook, which is regarding EM, and you're looking quite bearish there at the moment. Walk us through that call.
Yeah, so even though the dollar could weaken against G10, I think there's a lot of hurdles for emerging markets. And, just briefly, growth drivers are just not there at the moment. It's going to take economies a long time to get back to trend rate of growth. It's going to take economies a long time to absorb the output gaps that have been created from COVID. And the capital flow cycle is probably going to be weak for a number of reasons. And at least since April, we've seen this playing out in the sense that there's been strong inflows into Chinese equities and bonds, but the rest of emerging markets have not been attracting inflows. And we think this continues going forward.